Hi and welcome to Ocean AI. This is a introduction video to run through the basic rules for using the AI. With this, I'll show you a few setups as well, and also what you can expect to get each day before markets open and during the day. So firstly, we go to the chart examples. So this is what you'll receive through the Telegram group. I will send your chart, and all it'll have on it will be a blue line and a couple of dash lines. What these dash lines are the expected turn for the day. So, and what they have is the time on the bottom there, so you can match them up on your charts or however you want to do it. So this time is Jakarta time, as I'm in Indonesia at the moment, so you can adapt that to your charts and times. So we go from there, we go to the rules. So number one is this is a time-based strategy, not price-based. So with the blue line, it's only used for time. Sometimes it does follow the blue line for the whole day, which is good. You can scalp on that if you want to, but I prefer not to. Number two is don't follow the line. So the idea of the line is just giving a rough idea of where it's going, and it gives us our high point and our low point that we're looking for the day. Which brings us into number three, which is looking for the high or the low of the line. That's all we want to try and find. Anything in between, little ups and downs, don't really want to trade those. Number four, we have sideways into a time as a no trade. Like I was saying before, we want to see it getting into a low or a high to reverse that trade and go long or short. Number five, it's a 20-minute turn window. So around that time you're given, it can turn sort of 10 minutes either side and still be valid. I'll go through a few examples later on. And number six is I like to use it with patterns and Fibonacci levels. So those patterns are ABCDs, Gartley's, butterflies, and 3 drives. Right, let's go into an example for the first one. So time-based and not price-based. So what we have in the first one here, this is the pound dollar. This is an example of sideways into a time. So we wouldn't take, even though it worked and it went up that way, wouldn't take that trade because it was sideways. And this is an example of time-based, not price-based, because at this point here we're expecting a low, but it turned here and it was the high. So with an invert, that one going up there, you would sell that one short. Yeah, that's that one. And also this one here as well, another example on the crude oil here. So the high here worked well, and at the low here as well. So ideally you trade from this time to this time, and with following the line as well. See, this is why we don't follow the line, it's just time to time. So you can trade it however you want, but yeah, that's what I look for, time to time. Go to the next rule is do not follow the blue line. These are examples here with the crude oil once again. So we were expecting it to rally into this time, but it was actually the low for the day. So that's an invert, and we can trade that because it come down into this time, and we had a good move up into the expected high for the day. So that was a good move. These are the things we're looking for once again, to go from time to time. Another pound US dollar here. See how the line's different to the price. So another example, we don't want to follow the blue line. Right, on to the next one. We're looking for highs and lows of the day. So we go on to the Binance here with a crypto. So coming into this is where you'll get a chart. I'll send it out. an hour or so before this happens. If we're expecting a move down, then you'll get this, and then that's where we want to go long, and then trade it from that point to that point. That's the main idea and the easiest way to do it. Another example here with the Aussie dollar and the US dollar, looking for a low here, but this was sort of sideways into that. So that would probably be no trade, but we have a look at this point at 4 o'clock in the afternoon, and that gives us the potential for the high to sell off into the evening. So we're going on to the sideways into a time we don't want to trade. There's a Euro Canadian here. So what we're here expecting a top here, and it was just sideways, so wouldn't take that trade, just leave it alone. And the same with this one as well here. We're expecting to go from high to low here, but it was sideways through the whole time. So when we get things like this, we don't want to trade. But whereas up here it worked nicely, come up into the time and then rolled over. So these are the ones we look for. Sideways is not good. Too much indecision and things can go wrong. So now we're on to the 20-minute turn window. So what we had here with the Australian dollar, Canadian dollar, came down into the time. And this was on a longer time frame, hourly time frame. This was a major fib level and an ABCD completion. So it was a really good setup to go from here and to go higher. But what it did, we got triggered, and then it just sat here for a few hours. So if it does that, you just want to cut the trade. But even after half an hour, it hasn't moved. Best just to cut it, because what generally tends to happen if it doesn't move, it'll go against us, and this is what happened here. Went against us and didn't work. So on to the next one. So this is how I like to use it with patterns and Fibonacci levels. This is an example of the pound yen. With ABCDs, it's AB equals CD, so A to B equals C to D. So what we had was this time point was the completion of this Gartley pattern at a 61% retracement from this high to this low. So these are the ideal setups we look for. We want a pattern coming into a time at a fib level, and that gives us the high probability chance that it'll go in our direction. And with a trade like this, you would only need to risk about 20 points. Put a stop loss up here, and that would give us a good 3-to-1 risk reward. That's what we look for. So yeah, completed this smaller ABCD, and it didn't quite complete the bigger ABCD, expecting it to come down to this time. But when you get a move like this, sometimes it's good just to take profit, because you've made 3 or 4-to-1. So things we look for. This is another example. This is the DAX. So what we have here, we have the market coming down to this time, which is this one here. We're expecting a change in trend. So with this one, we had a 3-drive pattern. And with that 3-drive pattern, the last leg, there's an ABCD in there as well. And just like the previous one, it's adding patterns and Fibonacci levels in to make the probability a lot higher. So that's what I look for here. And as you can tell, this one, it was within 10 minutes of the expected low. So good place to get in, and it moved up pretty much to the expected time to time. So that would have been a good trade, and that was the expected high, and it fell away from there. That was around the open of the Europe session. So what I'll do is I will send with the traditional markets, forex, indices, stocks, things like that. I'll send out a Asia Europe session, and then I'll send out a US session later on. Yeah, so that's a basic rundown of how this works and a couple of examples. The next video will have trade examples in it to show you ones that work and ones that don't work, things to watch out for. Yeah, I hope this helps. Thanks for tuning in. Cheers.